Hey, how you doing? This is Greg again at DLA Markets. We're doing another live stream here to talk about a crazy week that went on in the markets and really in the world. And there's a lot to talk about, so let's get right into it. Now, the title of this live stream is "The Fed's Gonna Break Something." Otherwise, or as we would say in New Jersey, Fed gonna break something. Okay, that's the way we'd say it in South Jersey. But anyway, as things go on, as the market starts to fall apart in a predictable way, the way I've been predicting for months and months and months, as a consequence of raising the interest rates and sounding more and more hawkish and finally convincing people that they're serious, things are starting to deteriorate rather rapidly. And that's what we're going to be talking about on this live stream. Okay, so I'm doing this slightly before the market closes. So these are just, general numbers that I'm giving you here. Today was an overall down week for the market, as if you didn't know. The Dow was down around 5.3%. The NASDAQ was down around 6.3%. And the S&P was down 5.8% approximately. Okay, approximate numbers. Market hasn't quite closed yet. It's going to close in a few minutes. But anyway, it occurred to me as I'm watching the events of this week and watching everything that's going on and watching what's going on with the Fed and the fact that we and the rest of the market are expecting another 75 basis point increase at the next meeting. I began to start thinking this week that as time goes on and as we head into October, and we can't of course predict the exact timing of this, but at some point in time I get this horrible sinking feeling, and it's not based on rigorous analysis necessarily, more than what we've been doing on this channel the whole time, but I just have this horrible sinking feeling that the Fed's going to break something. Okay, as rates continue to go up, and as these aberrations and dislocations in the market and in the economy that have built up over many years of this irresponsible Fed policy and irresponsible government spending policies that we've talked extensively about. And in fact, I talked about that extensively on a live stream that I did earlier this week. At some point, as rates go higher and higher and higher, and as liquidity gets drained from the system, something's going to break. All right. And as Warren Buffett always likes to say, when the tide finally goes out, you get to see who's swimming naked. And that's really what is happening now, or will happen, I believe, in the future. But, these types of things, I refer to this, and many others refer to what I'm talking about as a black swan event, right? Whatever's going to happen that's going to have very dire consequences to the stock market and to the economy, we can't predict it, because something is going to happen that nobody could have foreseen. Of course, after it happens, it's going to seem obvious, right? Everybody's going to go, "Oh, we should have been able to predict that." That should have been easy to predict. And it's always the same thing. In '08, of course, it was the subprime mortgage meltdown and all the attenuant things associated with that, which caused a huge banking crisis, of course, and the whole world almost came to an end. But in retrospect, it seems obvious. Oh yeah, you give mortgage loans to all these people that can't afford it, and obviously, eventually that whole thing's going to blow up. But people didn't perceive it at the time, and people didn't pay any attention to it at the time, because too many people on Wall Street were making too much money. But what was happening was in the derivatives market, anyone who was paying attention could have seen or would have seen the dislocations that were happening and the things that were happening relating to that are always obvious in retrospect. But I digress a little bit. Let me not digress too much here on the live stream. Okay, so let's just discuss a couple of the headline types of things that happened this week, and then we'll get into some more discussion of it, okay? I guess the biggest thing, of course, was the CPI that came out on Tuesday at 8.3%, the headline number. It was higher than the 8.1% that people were expecting. This shocked the market. Kind of surprising how much it shocked the market, but the Dow on that day went down over 1,200 points, and people started to sit up and take notice and say, whoa, this inflation thing is worse than we thought. The Fed is more serious about it than we thought. And this surprise number really means that they really are going to give an ensuing number of increases that are going to significantly increase interest rates. And this was a shock to people. The CPI was up 8.3%, as I said, and the core was up 6.3%, which was an increase to 5.9% the previous month. Virtually all categories of items that you need to live, like heating your house, buying groceries, putting gas in your car, they were all up tremendously, even though gas has recently come down a bit. So that shocked a lot of people into reality, and the rest of the week remained, pretty volatile. And today, the market was down. I don't know, when I checked, the Dow was down over 200 points. Excuse me, and the Nasdaq was down, 1.8% or whatever it ends up being. But the point is, the entire week after that point was extremely volatile. The other thing was that we narrowly averted a railroad strike. The Biden administration and others that got involved, from where I sit, they just basically threw a bunch of money at the union workers, and whether they deserve it or not is irrelevant, but they just threw a bunch of money at them. I think a 25% increase in wages over the next 3 years, and they gave them an $11,000 bonus up front or some garbage. I don't know. They basically just threw a bunch of money at the problem, which is what the Biden administration is good at doing. And voila, problem averted. Okay, so I guess the footnote to that is this is kind of emblematic of why we have so much inflation. Okay, this represents wage inflation, and it's just a bad precedent because other unions and other organizations will view it as a cue to ask for more money also. But anyway, for the time being, crisis narrowly averted. I thought one of the things that came up that was really interesting, not interesting, it was also kind of dire, was FedEx reported that it's going to miss $500 million on its full year projections. This came as an enormous shock to the market, although it's hard for me to believe why, because I've been talking for a long time, and many others have, that earnings projections are still way too high and need to come down. And on top of all that, FedEx, and this is another thing that spooked the market, in addition to reporting this shortfall, they predicted rather strongly that there was going to be a worldwide recession. Now, if there's one company that has, a front row seat to the economy and to economic activity, it's FedEx, right? So that really caught the market by surprise, and the stock immediately traded down like 22%. Okay, but it really points to two issues. I think that the rapidness with which the worldwide economy is deteriorating, number one, and also number two, the fact that many companies are going to be announcing disappointing earnings, as they already have, but many more companies I anticipate as we go from September into October will announce reduced earnings and pressure on margins and things like that. All the things we've been talking about for many months. And it reinforces my belief that earnings projections still have to come way down from where they are now. Okay. Another thing that I found very interesting, which you may not have seen, is, and if I can find it here, yes, a guy that I follow very closely, Stanley Druckenmiller, and I've done a number of videos that feature Stanley Druckenmiller, and I'll put them down below in the description and maybe at the end of the video. But Stanley Druckenmiller, if you don't know who he is, you need to find out who he is very quickly. He's one of the smartest people in the markets. He is a person who historically has had one of the best investing track records of any person alive. He started the quantum funds with George Soros, and he was intimately involved with George Soros when George Soros made $1.5 billion in 1 month shorting the British pound in 1992. So he's a legendary investor. You should know who he is, and you should follow every word he says, because he's been right all the way through this situation since the pandemic, and the abusive Fed policies and governmental policies and all the stuff that we talk about on this channel. He's been on the forefront, and he's been right all the way through this. But anyway, Stanley Druckenmiller predicted this week that there's a high probability that the stock market will be flat for the entire next decade. Okay, and he cites several, that's quite a thing to say, but he cites that over the next 10 years, you could see a time frame similar to 1966 to 1982, where the market, for all intents and purposes, was flat. He cited that raging inflation and the central banks raising interest rates and deglobalization, which a lot of people, including myself, don't really focus on as much as we probably should, are taking hold along with the war in Ukraine dragging on. And he believes the odds of a global recession are now at the highest in decades. Okay? Very chilling prediction coming from a man of his stature and his track record. Okay? And I repeat again that Stanley Druckenmiller has been right all through this period, and I'll put that video that I did about a year ago where he predicted literally everything that's happened so far. He predicted in that video, so you should definitely take a look at it. Okay. The other thing that came to light this week that I think is interesting to note, because it affects a lot of things, is that it appears, at least from all the Western news reports, that Russia is currently badly losing the war in Ukraine. Okay, Ukraine recaptured, I don't know, over 2,000 square miles of territory. Basically drove Russia completely out of this area, and I think it's coming to light that Russia is taking unbelievable casualties. They have not had any wins for a very long period of time, and it seems like Ukraine is making a lot of progress, basically driving them out of their country. the reason why this is important to me is because I think it raises the question of what is Putin going to do about this? Is he just going to, accept defeat? I don't think he can. I don't think he possibly can. And it kind of raises the specter of the unthinkable, which is the use of nuclear weapons or tactical nuclear weapons, as they talk about. This, of course, is such a horrifying thing to think about. You don't like to think about it, but you can imagine for a second what that's going to do to the world, not just the human toll of doing something that horrible, but what is going to be the West's response, and what is that going to do to the world economy? I mean, it's really kind of an unthinkable thing, but it's something that we really have to consider as investors because it could happen. Whereas a few years ago it was completely unthinkable. Now it could happen. And what I've learned as I've gotten older is literally anything is possible. Okay, everything you thought was completely unthinkable, it can happen. So don't rule anything out. All right. Which leads me to really a question more than anything else. Like, what is the Black Swan event? What is it? What is the Black Swan event that could happen in the near future or medium-term future that nobody's thinking about? Nobody's considering, nobody's analyzing. You don't hear anybody talking about it on TV. I can't think of it because nobody's smart enough to anticipate a Black Swan event, right? Because a Black Swan event, just looking at the definition here, a Black Swan event is an unpredictable event that is beyond what is normally expected of a situation and has potentially severe consequences, all right? A Black Swan event is characterized by its extreme rarity, severe impact, and widespread insistence that they were obvious in hindsight. In other words, everyone recognizes in hindsight after it's happened, oh, we should have known, we should have predicted, we should have been able to analyze and figure it out. But the fact is, when it's happening in real time, nobody is smart enough to connect the dots to really predict it. So what is the Black Swan event? I mean, this is something that I'm thinking about and struggling with. And give me your ideas in the comments. If you have any thoughts, maybe we can all figure this out. But it's something that really hangs over my mind, at night when I'm sleeping and waking up in the morning and thinking about what could potentially happen. And just to name a few potentials, I don't know, housing, with the way interest rates are going up, we might have 7% mortgage rates soon. It's 6% now. I don't know, a housing implosion? That's kind of predictable. I don't know. That might not be it. Let's see. One thing I talked about, and I did a video, this is one of the first videos I did when I started the channel a couple of years ago. I did a video on the European sovereign debt crisis, all right? And I actually labeled it as the next Black Swan event, right? And it's kind of an oldie but goodie on the channel right now, but I'll put that one in the description too, just for fun, so you can take a look at it. But in that video, I predicted that because of the Ponzi scheme, I called it a Ponzi scheme, that the European Union has been engaged in since the financial crisis, is they have been printing money. This goes back to Draghi. They've been printing money and they've been buying their own sovereign debt. And this is the sovereign debt of, Italy, Portugal, Spain. They used to be called the pigs. And they've been doing this Ponzi scheme. I call it a Ponzi scheme because it's like fake finance, right? So the ECB, the European central bank prints money, just like we do here in the US. They print euros. And then when Italy issues sovereign debt, they buy the debt at massively below where the market would price that debt. In other words, there are many, many points, and I haven't checked recently, but many points in time when Italy was borrowing at lower rates than the United States. Okay? Now, Italy is a highly indebted nation that would be literally bankrupt if it had to borrow at market rates that reflected its credit risk. Okay? So I'm just making up numbers. So if the ECB is buying it at 2%, printing money and buying it at 2%, if that wasn't happening and they had to go out into the market and bondholders bought it, it'd probably be 10%, 15%. I don't know, maybe there'd be no bid, right? But in pretty short order, if they had to borrow at 10%, they'd be insolvent, like within a matter of months, you know? So I don't know. European sovereign debt crisis? I mean, I'm just throwing it out there. What do you think? Tell me what you think in the comments. Another area, derivatives. Okay, derivatives are always a mystery to the average person, right? What's currently going on in the derivative market, in the stock and bond market? In 08-09, it was credit default swaps, right? Against these mortgage-backed securities. What is it today? I'm sure there's something. I'm just not close enough to it. And I think unless you're, working in the bond market at Goldman Sachs or Morgan Stanley or something, you're not going to know this stuff. But there's probably something going on that none of us are aware of right now that could blow up as interest rates go up. It creates some kind of a dislocation. Things have to be unwind. Counterparties default. It's like a whole house of cards, right? That could be happening. I don't know. Crypto's probably not big enough to cause a black swan event. I think a lot of people are going to continue to lose a lot of money, but I don't think crypto's big enough. What else we got? Energy markets, right? You're seeing all kinds of stuff happening in the energy markets. There's all kinds of dislocation now. Some of it perceived, some of it misperceived. We have Europe going into the winter with natural gas prices at or close to all-time highs. Something could happen there that could cause enormous economic dislocation. I'm almost sure something like that's going to happen, right? Because that situation's not changing. And the US, for example, can't replace the gas that Europe is losing with the Nord Stream pipeline being shut down. So something's going to happen. I don't know what, but something's going to happen. And I already mentioned the geopolitical situation. That is a ticking time bomb. I talked a second ago about possible nuclear, a nuclear situation where Putin goes nuclear, but just even a conventional escalation of the war as a response to Ukraine's recent advances could cause more economic dislocation in Europe. Of course, all these things are things that we can visibly see now, except derivatives, okay, are all visible things that we can see, and we can put, we can piece things together and come up with scenarios. But typically a black swan event is something that we cannot anticipate. So there probably is something out there that none of us can see. And I guess the word is interesting. The interesting thing we'll find out is eventually we're going to find out. But I think the main theme of this live stream, the main theme is that eventually the Fed is going to break something. And I think that's what I wanted to talk about. That's what I want to leave you with. Thank you for joining. I don't want to make the live stream too long, but I'm going to put some videos that I think are relevant, both in the description and maybe at the end of this live stream on the replay. And I think we're heading into a very difficult period, one that most of us alive have never seen, because we've never been in an environment in the last really 20, 30 years where you've seen this level of Fed tightening. And the Fed put is not going to be there unless we have a real catastrophe, and then that's going to be a place that none of us want to go. But we're in for a real tough period here, not only for the stock market, but for the economy. Just to put out what I'm thinking now in terms of the U.S. economy, I already think we're in a recession. I think we're going to have a mild to severe recession in the United States. I think Europe is going to have a depression, which is essentially a prolonged period of substandard growth. The markets are not going to turn around anytime soon. And, I would be defensive in your investing at this stage. And I would not be afraid to hold a lot of cash. And in terms of what I'm doing, I've said on past videos and live streams that I'm primarily in energy. I'm in one or two selective growth stocks for long-term investment, keeping in mind that I might see short-term losses, like Google, for example. But for the most part, I'm keeping my powder dry, and I'm largely staying in energy because I think the fundamentals of energy are still very strong. All right, so let's leave it there. Have a great weekend, everybody. Thanks for watching. And if you got value out of this, please subscribe and like. And I'll see you on the next video or live stream.